All right, good morning. So this video is going to be a quick breakdown of the trade I took this morning on futures, Nasdaq to be specific, on the E-mini futures. Okay, so looking at the chart right now, I have the S&P E-mini on the left and the Nasdaq E-mini futures on the right. And I have the chart backed up here in replay just to show you guys what I was looking at when I woke up. The first thing that stuck out to me was prior to market open, price had dropped into a 1 hour fair value gap on both markets. You can see it happened at 7 a.m. on the 1 hour chart. And if you look at it on the Nasdaq, it's quite smaller, but it is there. So if I point that out, it's right here. Okay, what I'm watching for here is to see if this 1 hour fair value gap hits its target, which would be external high here from 5 a.m. on both markets. Okay, so if you go back on your charts, mark out the high of 5 a.m. That was the external liquidity target for this 1 hour fair value gap. Okay, so I'm watching to see, can both futures markets hit that? And if I drop down, I'm just going to drop down to the 15-minute and show you what happens. We'll back this up. So dropping down to the 15-minute. You can see how price is reacting off of this 1 hour level on both markets. I mean, look at this long wick pushing price back up to the upside towards the target. But if I hit the play button, watch what happens. Nasdaq takes out the external liquidity at this London session high, whereas the S&P does not. That right there is a signature for me per my plan. So whenever a fair value gap is tested and then price hits the external liquidity, the very first thing that I do is I take that high or low where we left from, which is down here in the gap. Okay, that's where we left from before we hit the target. Only after that target is hit does this now become a new area of liquidity. So in the recording that I'm going to show you after this breakdown, you will see where I actually change this line to a dotted line, but I do not do it on S&P because S&P did not hit the external target. Makes sense? So what I'm looking at here is some divergence between two markets that are supposed to correlate. Nasdaq hit its target, S&P didn't. So that sticks out to me. All right. So I'm not sure yet if S&P will yet push higher to hit the target, but I'm just making adjustments as price is moving in real time. The very next thing I noticed was this 15-minute fair value gap here. We tested it here, and this is all prior to market open. 9:30 is just one 15-minute candle away. So now I'm watching to see, does this 15-minute gap hold? And this is also on both markets as well. It's very small over here on Nasdaq, but now you can see that there. All right, you can see how deep price pushed past that 15-minute gap. Okay, so now what I'm going to do is I'm going to make some things clear. So now I'm putting the SMT level, the divergence level, 5 a.m. London session high on S&P is looking down on 9 a.m. Whereas on Nasdaq, 5 a.m. London high is looking up at 9 a.m. Okay, so that's an area of divergence. That's our divergence there. And now if I drop down to the 5-minute, this is where I was watching the price action happen. So you can see on the 5-minute how price came into this 15-minute gap, and we are getting a bullish reaction from it. But look at the price action on Nasdaq on the right. This large bullish candle on ES does not look the same as it does on Nasdaq. Somebody's lying here. So something is happening between these two markets, and the volatility was crazy in this area. It was just going up and down, up and down, up and down, down. So I'm watching to see, okay, we already have divergence at London high. What's next? Because this 15-minute gap has to show me something. It has to show me something. So this 15-minute gap currently is showing strength on the S&P, but on Nasdaq, it's not. Price is below its bullish fair value gap. You see that? These two lines here denote a bullish gap and price is beneath it. That's not supposed to happen. So I'm watching to see, is it going to follow through? So if I hit play, look what happens. I'm just going to back up just a little bit. At 9:30, the S&P actually pushes higher. And not only does it hit the 15-minute external liquidity, which is here, it also hits London high. So when I saw that, I no longer had divergence between London highs on these two markets. In the recording, you'll see me delete this line here and the one on Nasdaq, because now both markets have taken out London high, but there was still some divergence. The divergence was between the 15-minute external liquidity at 9 a.m. and current price at 9:30 a.m. and you'll see me mark that out here. So now if you look at these two charts, you'll see I have the SMT divergence line on 9 a.m. and 9:30, and you can see how different it looks on Nasdaq. Okay, on S&P we're looking up at 9:30, whereas on Nasdaq we are looking down at 9:30. In the recording, you'll see me put a line right here. It'll be a much smaller line in the recording, but the reason for that is because I was waiting for a close. I waited for a candle closure below this line. And what I wanted to see was if we got a candle closure below this line, the very next candle, I wanted it to come back and hit it and trigger me into a trade. And what I did was I put my stop just above this swing high here. And I'll make this red. Okay. So here's my stop loss. And I'm waiting. I'm looking at MetaTrader on another screen with my finger on the trigger, waiting for price to come back up, because I for some reason, I just cannot trust pending orders that much. I mean, sometimes the broker just doesn't trigger me in, and that just happens. But I know for a fact if I hit sell, then everything is good, right? So I'm waiting for price to come back up. The moment I'm triggered into the trade, I am looking for my area of liquidity. And if you remember me talking about the 1 hour fair value gap that hits its target, if you ever see an internal to external setup happen, if a reversal happens off of that level, it's likely going to gravitate back towards where that higher low was, which was in the gap. Okay, now my 2R happened before we reached that level, but if you look down here, this 1 hour line represents the swing low that entered the 1 hour fair value gap. I like to call these fair value swing highs and fair value swing lows. All right, in this case it's a fair value swing low, but watch what happens on this next candle. Boom. So you can see right here, I did get some drawdown, right? You can see in the wick, look at how far the wick goes above my line, but it did not reach my stop loss. So I was good in the trade, and the delivery was just beautiful. It went right below that area of liquidity and got close to, London low. But let me just exit out of replay. Okay, look at that. We actually hit London range low. And at this point now, I mean, I don't know what price wants to do, but that was my short position today. The S&P is still a ways away from its London session low, but I'll put the recording on screen for you guys. Beautiful trade today, really fast, and I'll show you that recording.